Hi students, I hope you are safe and healthy with your family and friends. This video we are going to learn about 12th Standard Accountancy, Chapter 6, Illustration Sum number 18. Let's read the heading. Raghu, Ravi and Ramesh are partners in a firm sharing profit and losses in the ratio of 2:3:1. Their balance sheet as on 31st March 2019 was follows. Liability items are capital, reserve fund and sundry creditors. Asset items are buildings, machinery, stock, debtors. Provision for bad debts is subtracted from debtors. Cash at bank they given on balance sheet. Apart from that balance sheet, they have given additional information, that is, Ramesh retires on 31/3/2019 subject to the following conditions. Okay. The first condition is goodwill of the firm is valued at 24,000 rupees, machinery to be depreciated 10%, building to be appreciated 20%, stock to be appreciated 2,000 rupees, provision for bad debts to be raised by 1,000 rupees. Final amount due Ramesh is not paid immediately. So what they ask, we have to prepare the necessary ledger account. That means ledger account means what? Revaluation account. Okay. And show the balance, revaluation account and capital account. Necessary ledger account, they mean that revaluation, to prepare the revaluation account and capital account for ledger account and balance sheet of the firm after retirement. Okay. Before prepare the revaluation account and ledger capital account for ledger account, first we need to prepare the calculation for the given adjustment. Okay, what is the first adjustment? Goodwill of the firm is valued at 24,000 rupees. So the calculation of the from the adjustment, goodwill of the firm is valued at how much rupees? 24,000 rupees. Okay, what is the profit sharing ratio they given here? 2:3:1. Okay, so 2:3:1 added together, you will get 6. The total value of profit sharing ratio is 6. So accordingly, Raghu's profit sharing ratio 2/6 and Ravi's profit sharing ratio 3/6. Ramesh's profit sharing ratio is 1/6. Who retired from the partnership firm? Ramesh is retired from the partnership firm. Okay. So what is the Ramesh goodwill, share of goodwill? So we have to calculate the goodwill value 24,000 with the Ramesh share 1/6. Okay. So 1666, 4 6 are 24. 14 is 4, 30 is to be added here. So Ramesh's share of goodwill of the firm is 4,000 rupees. The 4,000 rupees is immediately transferred to or immediately distributed to the continuous partner. Okay, who are the continuous partner after retiring Ramesh? Raghu and Ravi are the continuous partner. So Ramesh's share of goodwill will be distributed to Raghu's capital account and Ravi's capital account. What is their profit sharing ratio after retiring Ramesh? Listen, the old profit sharing ratio is 2:3:1. Now Ramesh is retired from the partnership firm. Okay, so we not consider the old profit sharing ratio. Then only we have to take the new profit sharing ratio. That means the continuous profit sharing ratio. What is the continuous profit sharing ratio? Continuous partners profit sharing ratio. The continuing partner are Raghu and Ravi. Raghu's profit sharing ratio is 2, Ravi's profit sharing ratio is 3. So added together 2 plus 3 you will get 5. So Raghu's continuing partner Raghu's profit sharing ratio 2/5 and Ravi's continuing partner Ravi's profit sharing ratio is 3/5. So we have to that retired partner Ramesh distributed his goodwill share amount, that means 4,000 rupees is to be distributed to continuous partners capital account with their new profit sharing ratio. After retirement, new profit sharing ratio is 2/5, 3/5. Okay. Accordingly, the goodwill value of Ramesh is 4,000 rupees. What is the Raghu's profit sharing ratio? So 1/5 is 5, 8 5s are 40. Okay. Then 2 8s are 16. 20 is to be added here. 1,200 will be transferred to Raghu's capital account. Okay. Then come to continue partner Ravi. So Ramesh, new returning partner Ramesh transfer is goodwill to new continuous partner Ravi with his profit sharing ratio, new profit sharing ratio, that is 3/5. Okay, 1/5 is 5, 8 5s are 40, 3 8s are 24, 20 is to be added, 2,400 rupees. So Ramesh capital, that means Ramesh goodwill is transferred to Raghu's capital and Ravi's capital, okay, account. So what is the Ramesh goodwill sharing ratio? 4,000 rupees. It will distributed to immediately Ramesh transfer to Ramesh capital account 4,000 rupees, okay. So what is the journal entry? Ramesh transfer his goodwill. That means Ramesh goodwill is transferred to Ramesh capital account 4,000 rupees. Total value of firm's goodwill value is 24,000. Accordingly, Ramesh goodwill, that 24,000 is to be distributed to the respective partners capital account with their profit sharing ratio. Who first we have calculated returning partner Ramesh. From 24,000 Ramesh profit sharing ratio 1/6, after we get to 4,000 rupees. So Ramesh goodwill value 4,000 rupees is a transfer to capital account. So Ramesh capital account transfer that 4,000 rupees. Then it will be distributed to the continuous partners capital account with their new profit sharing ratio. Okay. So after transferred, what is the journal entry? Raghu's capital account debtor 1,600 rupees, Ravi's capital account debtor 2,400 rupees, and Ramesh capital account 4,000 rupees. So this is the new information in this sum, okay, from the previous sum. Let's come to next adjustment. Machinery to be depreciated 10%. What is the machinery value they given in the question? The machinery value is 70,000 rupees, okay. We have to find out 70,000 for 10%. 10% means 10 by 100. 1010 cancel, 1010 cancel, remaining 7,000 rupees. Listen, machinery value what? Machinery value depreciated. So machinery value depreciated means it decreased. Machinery value belongs to asset account. If the machinery value decreased, asset account also decreases, okay. If the asset account decreases, it is to be respective asset account is to be credited. Which is the respective asset account? Machinery account is the respective account asset account, it is to be credited, okay. So machinery account is to be credited. Which account is to be debited? Revaluation account is to be debited, okay. So let's come to revaluation account. We have to look at revaluation account. Where is revaluation account appears in this transaction? Revaluation account appears on debtor side. Which is side? Debtor side. So you go to debtor side of the revaluation account, okay, and enter the opposite account, that means machinery account. So we have entered to machinery account 7,000 rupees on debtor side of the revaluation account. The next adjustment is building to be appreciated 20%. What is the building value given here? Building's value 60,000 rupees. So building to be appreciated 20% means we have to find out what is the 60,000 rupees for 20%. Okay, 20% means 20 by 100. 0 cancel, 0 cancel, remaining 6,000. Remaining 6,000 into 2, right? 2 6 are 12. 30 is to be added here. So 12,000 rupees building value appreciated. If the building value appreciated means the building value increased. Asset value also increased because building belongs to asset account. So asset account increases. If the asset account increases, it is to be debited. Which is to be debited? Respective asset account is to be debited. Which is the respective asset account? Building account is to be debited. Building account at 12,000 rupees to revaluation account 12,000 rupees. Listen, in this transaction, where is revaluation account appears? Revaluation account appears on which side? Credit side. So what you have to do? You go to credit side of the revaluation account and enter the opposite account. Which is the opposite account? From the revaluation account, building account. So you have to enter by building account 12,000 rupees on credit side of the revaluation account. What is the next adjustment, stock to be appreciated to 2000 rupees. So, how much rupees? 2000 rupees stock to be appreciated. Stock account appreciated means what? Increased. The stock account increased. If the stock account increases, asset account also increases because stock belongs to asset account. Okay. So, if the asset account increases, it is to be debited. So, stock account is to be debited. Revaluation account is to be credited. So, in this transaction, where is you have to find where is revaluation account appears. Revaluation account appears on credit side. Okay. So you go to credit side of the revaluation account and enter the opposite account from the revaluation account. Which is the opposite account from the revaluation account? The stock account. So you go to credit side of the revaluation account and enter by stock account 2000 rupees. Then what is the next adjustment? Provision for bad debts to be raised 1000 rupees. Okay. So provision for bad debts raised 1000 rupees means what? Bad debts we always calculated with the debtors. Bad debts belonging to debtors, we subtracted bad debts with the debtors value. Okay, so if you subtracted bad debts from debtors, your debtors value it decreases. Whenever your debtors value decreases, asset value also decreases because debtors belongs to asset account. So if the asset account decreases, it is to be credited, right? So bad debts is to be credited. Which account is to be debited? Revaluation account is to be debited. We have to find where is revaluation account in this transaction. Revaluation account is on debtor side. So you go to debtor side of the revaluation account and enter the opposite account, which is opposite account from the revaluation account, bad debts account. So you are going to debtor side of the revaluation account and enter provision for bad debt 1000 rupees entered. Okay. Then final amount due Ramesh is not paid immediately. It belongs to capital account, not comes under the revaluation account. Okay, ledger account, revaluation account, revaluation of ledger account. So revaluation related transaction, that means adjustment we entered on revaluation account as a ledger account. Now what we have to do? Now we are going to find out whether it is profit or loss. Whether the bill revaluation get profit or loss. Okay, how can we find out the profit or loss in the revaluation account? Before we are going to find out the profit or loss revaluation account, first we need to find out the total. How can we find out the total? Which side we have the higher value, that side we assume we treated as the total, right? So compare. First we have to compare debit and credit side. First we have calculated debit side total 7 plus 1 8,000 rupees on debit side. Credit side we have 12 plus 2 14,000 on credit side. So after compared debit and credit side, which side we have the higher value? Credit side we have the higher value. So credit side we treated as the total. Higher value, which side has the higher value, that side we treated as the total. So 14,000 rupees we consider as the total and entered. The same 14,000 total we have to enter the same horizontal line on debtor side. So both the side we enter the total. Okay, after we enter the total, we have to draw the double line. Listen, if you get the total on credit side, you will get the profit on debtor side. Okay. So how can we find out the profit on debtor side? We have to subtract the debit total from the credit total, right? So debit total value is 8,000 rupees. We have to subtract that 8,000 rupees from the 14,000 rupees. You will get 6,000 rupees differences. That 6,000 rupees differences is called as a profit on revaluation. Against this 6,000 rupees, you have to write immediately to profit on revaluation account. Then that profit on revaluation account 6,000 rupees immediately transferred to the respective partner's capital account with their profit sharing ratio. Who is the respective partner? Raghu, Ravi and Ramesh. Their capital account, the profit on revaluation transferred to capital account with their profit sharing ratio. What is their profit sharing ratio? They given in the question 2:3:1. Okay. Listen, if you get the profit on revaluation, where is you get the profit on revaluation account? You get the profit on revaluation account on debtor side of the revaluation, right? So what you have to write the journal entry? Revaluation account debtor. Why? you get the profit on revaluation account on debtor side only, you are going to write profit on the revaluation account debtor. It will be immediately transferred to the respective partners capital account with their profit sharing ratio. So let's take Raghu's capital account. Okay, 16666 cancel. For the 6 cancel. Remaining 2 ones are 2. This 20 is to be added here, 2000 rupees. Okay, then this 6 for this 6 cancel one time. 1000 into 3 is 3000 rupees goes to distributed to Ravi's capital account from the profit on revaluation account. Then this 6 for this 6 is cancelled. 1 ones are 1. 1000 into 1s are 1000 rupees is to be distributed to Ramesh capital account from the profit on revaluation account. Okay, so accordingly we entered Raghu's capital account 2000 rupees and Ravi's capital account distributed 3000 rupees and Ramesh capital account 1000 rupees distributed from the 6000 rupees on for profit on revaluation account. Okay, so first ledger account we completed. That means revaluation account completed. Let's come to prepare the next ledger account for capital account. First write the heading, the format you know already. Okay, so whenever you started the capital account, always started with the opening balance of the capital account. Opening balance of the capital account is always appears on credit side of the capital account. Okay, so where you've taken the opening balance of capital account and enter into the capital account, they have given in the question on liability side. So capital account to this of Raghu, Ravi, Ramesh respectively 30,000, 40,000, 20,000. This is called as, this is treated as opening capital. It will be transferred to credit side of the capital account. It will be entered as the opening balance of the capital account on credit side. How can you write? By balance drawdown 30,000, 40,000, 20,000 respectively entered with the respective partners column. After enter the opening balance, then come to which accounts goes to the capital account? Reserve fund, general reserve, workman compensation fund and profit they given in the liability side of the balance sheet. It will be transferred immediately to their capital account, credit side of the capital account with their respective partners old profit sharing ratio 2:3:1. Okay, accordingly we have to calculate that reserve fund value 36,000 rupees to respective partners old profit sharing ratio 2:3:6. Added together 2 plus 3, 5 plus 6, how much? 2:3:1. Added together you will get 2 plus 3, 6, 5. 5 plus 1, 6. Okay, so accordingly 2 by 6, 3 by 6 and 1 by 6. Okay, now we have to make the calculation. 1666, 6 are 36, 2 6 are 12. These 3 zeros is to be added here. Same as 1666, 6 are 36, 6 3s are 18, 3 0 is to be added here, 18,000 rupees. 1666, 6 are 36, 6,000 into 1s are 6,000 rupees. Is transferred to Ramesh capital account on which side? Credit side. So accordingly we entered by reserve fund account to 12,000 rupees, 18,000 rupees and 6,000 rupees entered with their respective partners column. Okay, then listen, we have to transfer the revaluation account to profit on revaluation account into the capital account. Where you find the profit on revaluation account? It is why? Because it profit on revaluation account transferred to respective partners capital account. So it belongs to capital account. Okay, this revaluation account, profit on revaluation account belongs to which account? Capital account. Okay, so where is capital account appears? Capital account is appears on credit side, or in other ways, where is revaluation account sorry, where you get the profit on revaluation account, you get the profit on revaluation account on debtor side of the revaluation account. It will be transferred to opposite side of the capital account, that is credit side of the capital account. Okay, when you get the profit on revaluation account on debtor side, it will be transferred to credit side of the capital account. Okay, so as for that you have to enter by revaluation account 2000 rupees, 3000 rupees, 1000 rupees, entire with their respective partners column in the credit side of the capital account. Okay, let's come for goodwill. Where is goodwill appears? Listen, the retained partners Ramesh share of goodwill is 4000 rupees is transferred to or distributed to the continuous partner Ramesh and Ravi's capital accounts. Okay, so you go to debit side of that. Where is Ramesh and Ravi's capital account appears? A debtor side. Okay, so you go to debtor side of the capital account and you enter the opposite account. That means Ramesh capital. Okay, Ramesh account. How much rupees? 4000 rupees is to be distributed to Raghu's capital 1600 and 2400 distributed to Ravi's column. Okay, so let's come to credit side of the capital account. Listen, if you go to credit side of the capital account, you go enter the opposite account, that is Raghu's capital account, enter into Ramesh column. Okay, 1600 rupees. This is called contra entry. And Ravi's capital account, how much rupees? 2400 rupees. Enter into the which column? Ramesh column. Okay, entered. This is called as what? Contra entry. Both the side we enter the goodwill values. Okay, after we enter the goodwill values, the respective capital account related transactions we enter into the capital account. Now what we have to do? We are going to find out the closing balance of the capital account. How can you find out the closing balance? Which side we have the higher value, that side we consider as the closing balance. Accordingly, debit side we have 1600 for Raghu, 2400 for Ravi. Ramesh we don't know any value. So comparatively credit side, which side we have higher value? Credit side only we have the higher value. So credit side we treated as the total. Credit side value we treated as the total. So for that we have to sum up the given value. 30,000 plus 12,000 plus 12,000, you will get 44,000 rupees. 40,000 plus 18,000 plus 3,000, 61,000 rupees. 20,000 plus 6,000 plus 1,000 plus 1,600 plus 2,400 added together, you will get 31,000 rupees. The same value, the same total, you have to enter into the same horizontal line with the respective partners column. 44,000 rupees goes to Raghu's column, 61,000 for Ravi's total, and 31,000 Ramesh total. Okay, we find out the total. Okay, then what you have to do? You are going to find out the closing balance of the capital account now. Okay, so first let's take Raghu's column. Okay, Raghu have 1600 rupees. It is to be subtracted from 44,000 rupees. You will get 42,400 rupees. Then come to, let's go to Ravi's column. Ravi has 2,400 rupees. Okay, lesser value. It will be subtracted from the total 61,000 rupees. We will get 58,600 rupees. Ramesh has no any value. So, okay. So, the same 31,000 rupees enter into Ramesh column. Against this 31,000 rupees, you are going to enter Ramesh loan account. Why you are going to write to Ramesh loan account? Why? Because, listen, final amount due Ramesh is not paid immediately. Listen, Ramesh retired from the partnership firm on 31/3/2019. Okay, so after calculated Ramesh settlement amount, it is 31,000 rupees. What is the Ramesh settlement value? 31,000 rupees. That 31,000 rupees amount not paid immediately. So it will be that called as a due amount. Okay, that means continuous partner has to pay due amount 31,000 rupees to retiring partner Ramesh. up to settlement, that 31,000 is considered as a Ramesh loan. Ramesh provide loan to the partnership firm. Okay. So you have to write to Ramesh loan account 31,000 rupees. Listen, and then that 42,400, 58,600 is called as closing balance of the continuing partners capital account. Okay, you are going to, against this you are going to write to balance carried on. Carried on means what? Closing balance. The closing balance immediately brought down to the opposite side. That means it creditor side. You have to write by balance brought down the same amount 42,400 for Raghu and 58,600 for Ravi's column after enter the total. That means below the total you have to enter that 42,400, 56,600 rupees, 58,600 rupees. This is called opening balance of the capital for the next accounting period. Okay. So these two partner only continue into the partnership firm. Their opening balance of the capital 42,400, 58,600 respectively. With this capital they started the business for next accounting period. Okay. Let's come to balance sheet. So balance sheet dated on 31st March 2019. So, listen, 31st March 2019, which date the partner retired from the respective partner retired from the partnership firm, that date you have to prepare the balance sheet. Got it? So, dated on 31st March 2019, you know the format. Okay. So, first we have taken the balance sheet item from the old balance sheet. Okay. Listen, first you prepare the asset side of the balance sheet. Buildings value 60,000 rupees. So buildings value 60,000 rupees enter into inner amount column because building has the adjustment. How much rupees? Building value is appreciated 20%. Okay, 20% means increase. That means added. So 20% called 12,000 rupees. So building value added 12,000 rupees. With 60,000 you will get 72,000 rupees. Then machinery 70,000 rupees. Machinery we have any adjustment? Yes, machinery we have the adjustment 10% depreciation. 10% depreciation means it decreases. Decreases means we need to subtract it 7,000 rupees from machinery value 70,000 rupees. After subtracted you will get 63,000 rupees. Okay. Then come to old balance sheet given in the question. Okay. Stock value 20,000 rupees. We have any, first we have look at the adjustment. Any stock have adjustment? Yes, stock to be appreciated 2,000 rupees. So stock appreciated means stock to be added. Okay, 2,000 rupees added together 20,000 you will get 22,000 rupees. Then listen, debtors to 18,000 rupees less provision for bad debts. This is the old bad debts. Okay, 1,000 rupees subtracted. We have another bad debts in the adjustment that is called new bad debts. It is also to be subtracted. 1,000 plus 1,000, 2,000 rupees. Bad debts to be subtracted from the debtors value 18,000 rupees. Okay. So debtors 18,000 rupees, old bad debts and a new bad debts. Okay, old plus new bad debts added together 1,000 plus 1,000, 2,000 should be subtracted from the debtors value 18,000. You will get 16,000 rupees. Okay, and now cash at bank. Cash at bank 9,000 rupees. Cash at bank 9,000 rupees directly enter into the outer amount column. Okay, let's come to liability side. Liability side we have the capital account. Capital account for Raghu, Ravi, Ramesh. Ramesh is retired from the partnership firm. We not taken the capital value for Ramesh. We have to take the continuing partners capital account only, enter into the balance sheet. Okay. So Raghu and Ravi's capital you have to take from the capital account, because this is the opening capital for the next accounting period for the respective partner, company partner, which means Raghu and Ravi's capital is 42,400, 58,600 rupees you have to enter into the liability side of the balance sheet. Okay, 42,400 plus 58,600 added together, 1,01,000 rupees. Then retaining partners Ramesh settlement not paid immediately. Okay, so we have that we have means what? The continuing partners has taken loan from Ramesh 31,000 rupees. That loan amount for Ramesh is to be entered on debtor side. That means liability side of the capital account. Ramesh loan account amount 31,000 rupees. Okay, then come to liability side for old balance sheet given in the question. Sundry creditors 50,000 rupees is to be entered on liability side, 50,000 rupees. Then what we have to, we are going to find out the total. The total of a balance sheet always equal on both the side, asset and liability side. We have the same value. If you not get the same value, you have to some mistakes. Okay, so let's come to liability side total. We have to sum up the liability side total. 1,01,000 rupees plus 31,000 rupees plus 50,000 rupees added together, 1,82,000 rupees. Let's come to prepare the asset side total. Okay, 72,000 plus 63,000 plus 22,000 plus 16,000 plus 9,000 added together, 1,82,000 rupees. So we get the same value on both asset and liability side. So our sum is correct. Okay. Do you have any doubt? Please comment it into the comment box. Thank you.